building, you sell furniture, or you purchase new furniture. So this is the net amount. Financing, borrowing or repayment of borrowed funds. You borrow money. Financing include both from outsiders and insiders, both. Right? So this belongs to outsider. You are borrowing from the bank or repaying the borrowed funds. Equity transactions, for example, you issue stocks, you are paying dividends, and also treasury stock. You repurchase of your own company stock, treasury stock. Right? So these three activities are reported on cash flow. Now again, let me answer that question. Why there is a need to make statement of cash flow when we already make income statement? Because in income statement, there are non-cash expenses are also written. For example, depreciation. So the value of the depreciation is calculated through a method. Whether the company didn't use a car, the company executive didn't use a car, it stayed within the company. Even then, after a year, the value of the car decreases. And we apply some method, right? So the value of the car may be decreased or may not be decreased. That depends market conditions. But since we are following some kind of method, so we must include those methods value. So depreciation is an actual cash. You actually pay for the wear and tear of the asset. No, right? So that include a non-cash expense. So that's why income statement is not reliable one on which you can have investment decisions or some kind of a decision to invest in this business or move. Some people, the high executive, they see the statements and they join the company. If the company is not doing good, then they say that no, we are not joining your company because we don't see a good future here, right? So the difference between income statement is that income statement reports all the non-cash expenses as well, but the cash flow statement only involve the cash transactions. So the blood for any organization is cash. Sometimes the business report $1 million profit, but on their bank accounts you only have $1,000. So that is the difference. So that's why you follow the cash payments and cash receipts. That's it. So most of the analysts or the companies who want to invest or banks who want to give loan to the companies, big loans, so they see their cash flow statement because then they know that where cash is coming and where cash is going. Here is the example of cash flow statement. You see here, cash flow from operating activities, you see net income, and you see the other stuff, how you make that net cash provided by operating activities. This is the CFO, cash flow from operations. This is CFI, cash flow from investment. You see, property purchased, property sale, change in other asset. How they calculated that? They just see the balance sheet and they see that whether they increase or decrease. Right now, we are not going to see that how we are calculating that. Just going to give you a flavor that how the cash flow statement looks like. And cash flow from financing, you see, you receive debt, you issue stock, you purchase your own stock. So that's why it is a negative sign. See, negative sign. Parentheses mean negative. Either you write it down negative 94 or either you write it down like this. So it means negative. And you see here 17, right? So that is equal to the cash and cash equivalents on the balance sheet. 1561, you see here, that would be the value of 2012 cash and cash equivalents. Sorry, Cash, that is the beginning cash and cash equivalents. 1885. You look at that one. It also verifies your balance sheet claim as well. Let us just.
Hello, sir. Sorry for being late.
This is our accounting class. Please leave that one. Do we have that one? If you see cash and cash equivalents here, 1885, right? So cash flow statements also verify the balance sheet cash and cash equivalents. So in a sense, the balance sheet tells us what's going on with the cash and cash equivalents, where the cash is going and where the cash is coming from. Right? Everybody?
So it is the so it is cash outflow plus cash inflow, you mean?
Cash inflow minus cash outflow, the net amount.
Okay.
Okay. Plus we have segregated, we have calculated whether this activity belongs to operating or investing or financing, right? Okay, let's do this example and then we will end our class. Here we go. So assume SP Technologies Incorporation is expanding into Australia. So identify the financial statement where decision makers can find the following information about SP Technology Incorporation. In some cases, more than one statement will report the needed data. So you tell me, revenue will be recorded in which of the statement? Income statement, retained earning, balance sheet, or cash flow? Tell me.
Income statement.
Very nice, Mr. Dividends belongs to both.
Yes.
Statement of retained earnings and cash flow. In cash flow, it will be recorded as cash flow from investment activity. Right? Current liabilities.
It's outside for us.
Which statement gonna use this word? This one.
This one we're gonna use
Balance sheet or income statement or retained earning?
Balance sheet.
balance sheet.
Balance sheet.
Balance
Very
sheet.
nice. Very nice. How about the total assets?
Total asset.
Balance sheet.
Very nice. How about
Balance sheet.
selling, general and administrative expenses? Expenses?
Expensive is
Income statement.
Very nice. Revenue
Cash.
expenses gonna be
Isn't it cash flow?
no, because
Because isn't it operations?
there is no word the cash written here. The cash flows can be, you may be right, but
Okay.
normally it may be it's an income statement. Right?
Okay.
Understand? Expenses are used in, but the E part, it didn't mention that the cash expenses. If cash expenses, then we can say that income statement and cash flow statement both. Understand? Okay, ending cash balance, both. Cash flow statement and balance sheet. Okay, now cash spent to acquire a building. Where you can write it down.
Cash flow.
Expenses?
It's not an expense. Remember that one. The building usage is for more than 1 year or less than 1 year.
It's assets. Then it's balance sheet.
Statement of cash flow and balance sheet as well. You're right. But since it's a cash spent, so you can also use in cash flow as well. But this is a balance sheet item as well, building for sure. Ending balance of retained earnings in balance sheet and retained earning as well. The ending part of the retained earning is the statement of retained earning and balance sheet. How about the net income?
Income statement.
And retained earnings as well, because income
Balance
statement,
sheet?
net income also
Oh,
uses
right, right.
retained earning as well, right? And also cash flow statement as well. Okay, do we have another question? Yes. Now income tax expense. Income statement or balance sheet?
Balance sheet, I think.
Income tax expense.
Income.
Balance sheet only report.
Balance sheet.
Balance sheet only report prepaid expenses. So no return was here as a prepaid, right? So this
Taxes.
expense. Expense means income statement. The formula for income statement is revenue minus expense. So it will go
Yeah.
to expense side. Common stock.
Balance sheet.
Common
Cash flow, I want to say.
in cash flow, there must be
No.
issuance of cash common stock. There is no issuance, just common stock. Yeah, you may be right, but balance sheet is the right answer. Why? Because for sure, common stock going to be recorded in balance sheet under owner's equity.